A tax-free savings account, or TFSA, is a tax shelter for your investments. Despite what the name suggests, a TFSA is more than just a savings account. You can hold a variety of different investments inside it, not just cash. All the money earned in a TFSA is completely tax-free. This lets you reach your savings goals sooner because your money grows faster. You don't have to open a TFSA at one of the big banks. You can open one at most financial institutions as long as you meet the eligibility requirements. You're not limited to contributing your money to just one TFSA. You can open as many as you like and spread your contributions out over multiple accounts. If you choose to do this, the total amount contributed to all your TFSAs during a given year can't exceed your contribution limit. Yes, there are limits to how much you can contribute to your TFSA. Every year, a certain amount of contribution room becomes available to you. When TFSAs were introduced in 2009, the annual contribution limit was $5,000. Since then, the limit has gone up. And now, in 2017, it's at $5,500. You'll accumulate contribution room every year, starting in the year you turn 18, even if you haven't opened a TFSA. If, during any given year, you don't contribute up to your limit, your unused contribution room is carried forward to future years. So, if you were 18 or older in 2009 and you've never contributed to a TFSA, you'd have $52,000 in available contribution room if you opened one in 2017. You're free to withdraw money from your TFSA at any time. You don't have to pay tax on the money you withdraw either. Just take it out and spend it. You also get to recontribute the full amount of your withdrawals back into your TFSA starting as soon as the next calendar year. Let's look at an example. Let's say you turn 18 in 2015 and you get $10,000 in contribution room. If you contribute all $10,000 available to you, your contribution room for the remainder of 2015 would go down to zero. Now let's say you withdraw $3,000 later in the year. Notice that your contribution room for 2015 stays at zero since you can't add that withdrawal back until the next year. But by 2016, your contribution room would consist of the $3,000 withdrawal that you can now replace plus another $5,500 in new contribution room for a total of $8,500 in available contribution room. If you don't keep track of what you put in and take out of your TFSA, you might accidentally over-contribute to it. The penalty for over-contributing to your TFSA is 1% of the excess amount charged each month until you withdraw the extra money or you get more contribution room. This penalty can be very harmful to your savings. Let's say you over-contribute $1,000 to your TFSA in July. You'll be charged 1% of $1,000 for every month from July to December for a total of $60 in penalties by year end. Here are some tips to help you get the most out of your TFSA. If you plan to max out your TFSA, use your contribution room for interest-earning investments first. Since interest is taxed at a higher rate than capital gains or dividends, your investments could benefit more from the tax savings generated. Remember, you don't pay any tax on withdrawals made from your TFSA. If you're trying to decide whether to put your money into a TFSA or an RRSP, go with a TFSA if you think your future income will be higher than what you're earning now. If your current income level is lower than what it will be in the future, then you'll save money on your taxes if you wait to contribute to your RRSP when your income is higher down the line. Instead, contributing to a TFSA now lets you earn money tax-free later on when you're in a higher tax bracket. If you think your future income will be significantly lower than what you're earning now, as is typically the case in retirement, then you'll be in a lower tax bracket in the future. You'll enjoy greater tax savings if you contribute to an RRSP now, and you won't have to pay as much tax on your withdrawals when you make them. Avoid using your TFSA for retirement savings, and instead use it for shorter-term savings goals, such as buying a new car or going on vacation. That's everything you need to know about the basics of the tax-free savings account. Thanks for watching.